Good morning, folks, and welcome to the Pre-Market Insight for January 27th, 2020. All right, I hope you have your hedges on. Let's go. So we're looking at a chart of the ES S&P 500, and currently we're a gap down just about 48 points, 1.43%. We haven't had that type of move in quite some time, given the bullish sentiment that we had for the last, I would say, 2.5 months, 3 months or so. You can see this very clear and strong uptrend that we've had. However, I want to bring to your attention, we began speaking last week about the fact that the price action was getting sloppy, ranges were expanding, and even in the midst of ranges expanding, momentum was sort of dying down. Now, these are the types of market conditions and market environment that as a trader and active investor you need to be mindful of, because it signals a shift in the way that the market was acting before. We began speaking about the fact that we are in the midst of broadening formations, which means that we have been experiencing higher highs in the midst of and in the context of higher lower lows as well. Now this is particularly unusual because in a trending market and you're making higher highs, you expect higher lows to follow in order to keep with the trend. However, we've been experiencing both higher highs and lower lows, signaling that again ranges were expanding and the price action was becoming a lot less firm. The trend was becoming a lot less resilient, in the short term at least. And so on Thursday and Friday last week, we began talking about the fact that even at all-time highs, there were some of you that were particularly probably experiencing drawdowns, and you're frustrated because wait a minute, the market is at all-time highs. It's at the highest it's ever been. Why am I not performing better? And I spoke about the fact that because we have such wide-ranging moves, it is very easy if you're not nimble or if you're not sized correctly in terms of your positions, then it is very easy to get chopped up in this new broadening formation. So now the market is a very finicky beast. It pays attention to the news that it wants to, when and how it wants to. So all through here, we've had issues surrounding the Trump presidency, the China-US tariff. We had the UK and the Brexit elections, and then all of a sudden, with the news of the coronavirus in China, that was the impetus that the market participants who desired to sell all along used to begin emptying their positions and or going short against the all-time high at 33.37. Now, keep it simple, smarty. What do we have for today? Well, we've got a number of areas to pay attention and to look at, especially because we have such a large gap down in the context of a very bullish environment. So, first we want to see the morning's low. What is the morning's low to be able to trade against? And so usually in a situation like this, you want to see on at least the very first 15, 30, and 1 hour bar to see if there's a reactionary low, to see if there is something that you can trade against to possibly go long. We have an open here last night of 32.69. So to the upside, definitely the first test of real strength of any buying and a buying demand and aggressive bullish behavior would be 32.70 on the upside. If we do regain 32.70, then very easily we can see 32.80 as well, then back into 33.04 at a very optimistic level. But given the fact that prices responded quite bullishly every time we've been giving this magnitude of buying opportunity, I would not be surprised once more if we have perhaps a day or two, maybe even 3 days of weakness, sideways action before we get a sustained push to try to regain this 33.04 level to the upside. Be safe out there today, guys. Cheers.